Okay, once again, you all are welcome to this amazing session. This is the voice of the Simple Trading Professor, and I want to welcome you to the Simple Trader community. Today we are having our mentorship session. So most of us here, I believe this is the first time we are coming into the mentorship live session. If this is your first time, let me know. Unmute yourself and talk to me. Tell me if this is your first time.
This is Pastor Ayen. This is my first time.
Yes, this is my first time.
This is my first time.
This is John Adu. This is my first time.
Amazing. Welcome. Welcome, everybody. So, amazing. You are welcome to our live session, the Simple Trader community. Now, what we do here is the goal is to simplify Forex, to help you understand Forex in a very simple way. I believe most of us who are here today, we have been trading Forex before, and maybe we are not profitable, and that is why we are here. Or this is your first time trading Forex. Maybe your first encounter with Forex is through me, the Simple Trading Professor. Now, you have decided that you want to take this Forex career very, and you are looking for a solution whereby as you start your journey, you're going to be successful and become profitable. Now, I'm not saying that you will never as you trade Forex. No. What I mean, becoming a profitable businessman. And losses, you don't get to go home with profit the way. You still get to go home with profits every single month or every single week. Yes, there must be loss in Forex. There will be loss in Forex. Okay, that's the simple truth. But with what we have and with what we're about to share with you, you can become a profitable trader, not just a profitable trader, but a consistently profitable Forex trader. So today, I'm going to dive into what we have and share with you how we trade the financial markets. I know some of us who are new here, you might be wondering, how do I get started? Yes, okay, everyone is muted now. Everyone is muted. Please mute your mic if you are not muted. Mute all. Okay, so I've already given you access to our course on Seller. If you have not gotten your access, not to worry. After this session or tomorrow, we can connect and then give you access to the course. Okay. Now, what you need to do is go over the course on your own. You can do that 2 times from the beginning to the end and go over it again so that you are sure that you understand what was taught on the recorded session. And then you can begin to join our live sessions like this and also interact with other community members, okay, on the WhatsApp community. So without wasting time, let me introduce you to what we have, the simple trading methodology. To do that, I am going to share my screen with you. Okay, a moment, please. Okay. Now, I believe you all can see my screen. You can just unmute your mic and let me know if you can see my screen. Unmute your mic and talk to me. Can you see my screen?
Yes, we can see it. We can
Yes,
see it.
we can see the screen.
Oh, amazing.
Yes, I can see it.
Amazing. So the challenge that most forex traders have is, how do I become profitable? Of course, we know that most of the trading activities will take place on the trading platform MT4, MT5. That is where most of your trading activities will take place on the MT4 and on the MT5. MT4, MT5. That's where you're going to be having most of your trading activities. So what I mean is, if you want to execute your trade, you come to MT4, execute your trade. Come to MT5, execute your trade. But the challenge that most forex traders have is, how do I know when to buy? How do I know when to sell so that I'm going to be on profits? Because a lot of people have tried trading, but yet they kept on blowing accounts over and over again. Okay, and you do not want to fall into that cycle of constantly blowing your account or constantly losing money in the financial markets, which is why we have the simple trading methodology. Okay, so what we do in the simple trading methodology is that we trade with price action. Price action. Now, there are different ways to trade in financial markets. There are different ways to know or analyze the markets or know whether to buy or whether to sell. One of the ways is using tools like this called indicators. The lines you see on my screen are called indicators. This one here is moving average indicator. When you come over here, you are going to see a lot more of those indicators. These are indicators you can use to analyze the market. Aside indicators, people also trade with what we call patterns, forex patterns. Okay. Aside price action, okay, and these are form of technical analysis. Some people work with tools like this, the shape tools, okay, object tools, trend line, and also the horizontal line, which they use to get their support and resistance, and also trend line to get trend, which sometimes act as support and resistance. So there are various ways that people use in approaching the market when it comes to analysis, even when it comes to technical analysis. But all of these ways are really not helping some traders. For example, trading with indicators like this, one of the challenge is that indicators are lagging. By the time they tell you to buy, the market has already gone far. By the time they tell you to sell, the market has already gone far, meaning that indicators are telling you what you should have done half hour ago. So that's one of the challenge of indicators, although we still have some other indicators that are not really lagging, okay? Then we have patterns. One of the challenge that people have when trading with patterns is that there are so many patterns and you cannot memorize all of the patterns. Even if you say, I want to trade with one or two different type of patterns or just one pattern, what it means is that you have to be waiting and waiting until that pattern is formed on the market. If that pattern is not formed, you will not enter a trade. And sometimes you find traders working with patterns, missing trade opportunities simply because they are waiting for patterns. And by the time they come to the charts, they discover that the pattern has happened. The pattern has been formed some time ago, and the trade has gone far in the direction that they should have entered. But now they can no longer enter the trade at the moment. So these are the challenge. Then we have what is called price action. Price action. Now, one of the people will tell you price action is the best. Yes, I believe that. Trading with price action is the best. But one of the challenge of price action is that it is controversial. It is controversial. Even forex coaches, forex pros, most of them sometimes will not even agree on some forex price actions. Okay. For example, you see something like this. They will tell you that is a pin bar. Another trader will come and tell you this is a shooting star. Another one will come and tell you this one is engulfing, bullish engulfing. They have various names for each of the candles or two candles combined together. And sometimes people can't really trade with all of these things because sometimes what they need to do is not keep looking for price action, just one candle to tell them what to do. And when you open that chart, sometimes you might not even see that candle. So these are the challenges that a lot of traders are having, myself included. I also had challenge in the financial market before I discover what I'm about to share with you. So how do we approach the market? We have a different approach, and our approach is what we call the simple trading approach, STA, simple trading approach, or you call it the simple trading methodology. What it means is that we have a different method of trading or of checking the market or analyzing the markets. Now, what you see on your screen is what we call price. Okay, let me remove this indicator for my screen, but I have to put the indicator that is there. Okay. Okay, this is charts. Now, what we have on the chart is price. Please understand this. This is price, okay? And this is date and time, okay? What you have here is date and time. What you have here is price. And what you are seeing is price moving up and down. Now, price here is represented in what we call candlestick. Not just candlestick, but Japanese candlestick, okay? Japanese candlestick. That is what we are saying. Price can be represented in different form. Price can be represented in different form. For example, if you come here, you'll see on the settings, you see chart type. Now, what we have there is candlestick. You can change it to line charts. Let's change it to line charts. Now, this is line charts. Now, this is price moving up and down. So at this specific time, what was price? This is price at that specific time. That is what it simply means. But most times when we are trading Forex, what is truly important to us is the current price. This is the now time. This is the current time. And what is price of this particular asset right now? That is the price. But when you look at the chart, what you see is that price at some point in time, even today, was at this price, and then price fell down to this point, went up to this point. So what we have from here is like history, okay? Backward is history, okay? History, past charts, past price. Then this is the current price. And what will happen after now, we don't know. That is the future, okay? So the past price is truly also important. Past price is also important because it is from past price we can also use to predict the future. But what I want you to understand here is that this is price represented in line. Now we can also represent price with what is called bar charts. Bar charts. Okay, and this is it. This is bar charts. Now, these are not popular. The line chart is not really that popular. The bar chart is not really that popular when it comes to trading CFDs, Forex on MT4, MT5. What is very popular is what we call the Japanese candlestick, which is this one, okay? This is what is popular. This is what is popular. But yet, the statistics remain the same. What is the statistic? I think 97, is it 97% of Forex traders lose money or 95%? 95% of Forex traders lose money. only about 5% of them makes money from the financial markets. Now, this is what 95% of them knows and what they trade with. What they know and what they trade with is Japanese candlestick. Japanese candlestick, and they are not profitable. Now, I'm not telling you that the 5% others that are profitable, I'm not saying that they do not trade with Japanese candlestick. They also trade with Japanese candlestick. But that is where we comes in, okay? The simple trading professor and the simple trading methodology. Now, when I say, okay, what do we do? How do we approach the market differently in order for us to be profitable? And we decide to change our chart type instead of looking the regular chart, because there's a challenge on the regular chart, and this is the challenge. Some trader may enter a trade at this point, for example, a set trade, and then the trade is going down, and then the next thing they see is price pulling up, and they begin to panic, thinking that the price is going to go up against them, and they may be forced to close their trade on loss, only to later discover that price actually went their way, and that if they are stayed on the market for long, then they would have been profitable. The person that cannot hear us, somebody says he cannot hear us, please let me know if you can hear me clearly.
I can hear you loud and clear.
Okay.
Yeah.
I can hear you.
I can hear you loud and clear.
Amazing. Thank you very much. Thanks for your feedback. Okay, so this is a challenge of most traders. Looking at this alone, even somebody enters, for example, you see this. Okay, the market is going up. The market is going up, and you try to enter the market at that point. When you enter the market, the next thing you see is that price is going down, and this is even good. What's going to happen is that the trader will begin to panic that the market is going against, and they may decide to close the trade at this point, only to discover that if they had stayed on that trade, they would have made massive profits. And that is what I see that is really the challenge of many traders. That is the challenge of many traders. Some will tell you that I will enter a buy trade. The moment I enter a buy trade, the market begins to fall down. I will enter a sell trade. The moment I enter a sell trade, the market begins to push up. These are the challenge of traders. And sometimes you find themselves chasing the markets. You find them chasing the markets. At the end of the day, they will end up losing so much money or even blowing their accounts. So in order to solve all of this issue, what we are going to do is do not analyze your markets with the MT4 and the MT5 based on what we are going to share with you. That is why we are going to create an account with TradingView. So all you need to do is go over to tradingview.com and create a free account. Now, when you come to TradingView, you can select your assets from here. Okay, select your assets. Now let's switch the assets to USD JPY. Okay. Now note that what I'm about to share with you does not only apply to USD JPY, it applies to other currency pairs. Okay. Now this is the USD JPY chart, and right now we are on a daily time. Share with you the simple trading methodology today on a daily time frame. But also note that whatever I'm going to be sharing with you on the daily time frame The same principles apply on even other time frame, maybe the lower time frame or higher time frame. So if you want to trade the 1 hour time frame, the same principles I'll be sharing with you on the daily time frame, just apply same principle on the 1 hour time frame, and then you are good to go. So like I said, today I'm going to be working with USD JPY on the daily time frame. That means this is going to be a swing trade opportunity that we are looking at. But what I want you to see is how you can be profitable with what we have. Now, the simple trading approach is this. Number one, do your analysis on trading view. Number two, do not work with the Japanese candlestick. Now, how do you change your candlestick? This is it. This is trading view. This is trading view Chrome. This, if you are working with the application, how to change your chart type is a little bit different. Okay, you should know how to do that. Okay, there's a video for that already. Now we change our chart type by clicking on this button. Now, which chart type are we going to work with? Now, see this. You see that on MT4, MT5, we have just TV chart type. But here, we have more than TV chart types. Okay? These are different chart type. These are different chart type. Okay? Different chart type. So the one we want to take here is the Ikinashi chart type. So we want to switch our chart type to Ikinashi chart type. So let's do that. So I'm going to select Ikinashi. You may want to also click on this to add it to your favorites. Okay? Something like this. Okay? Then you click on it to change your charts. Now you see our chart is now on Akinashi. Okay? But what's the difference? Let me explain the difference to you. The regular Japanese candlestick that you know is like this. This is the formation where we have this to be the open and this to be the close if this was to be a bullish candle. Okay, and this is the closing price. This is the open price. Now, where the market close, that is where the following market is going to open. The following candle is going to open. The market close here, it's going to open there and form another candle. Now, this is also a green candle. Okay. Now, where this one close is where another one will open. So this is the open price because this was the close price. This was the closing price. This was the open price. So if this one closes here, the following candle is going to open from there and then closes however. Okay, so if this one opens here and then closes below, it forms a red candle. If it opens above and closes below, it forms a red candle. So the close will not be here. Okay, close. Now, let me go over this again so that you understand. The Japanese candle is like this. Open and close. Open and close. This is how you see it. Now, what is key here is that if this one opens here and closes here, the following one will open at the closing price of the previous one and close here. The following candle will open at the close price of the previous and close here. The next candle is going to open at the close price of the previous, and when it closes here, the next one will open at the close price of the previous candle. That is how Japanese candle work. Japanese candle usually have wick on top and below. And sometimes it may not have wick on top and below. The reason for wick simply means the lowest point that price went to before price changes direction. Okay, or the highest point that price went to. Market opens there, okay, open. The price did fall down to this level. The price rally up again as high as this level, but finally closes here. That is the formation of wick. Okay, but that is not how the Akinashi work. You will need to go to probably YouTube and watch videos on Akinashi. But even on our recorded course, if you go through the training, you are going to understand Akinashi more. Okay, because I've already done some training on how Akinashi works. Okay, but I'm going to give you just a preview. The Akinashi works like this. If this is the current candle and it closes, the following candle is going to open at the middle of the previous candle. This is how it's going to open. The other candle is going to open at the middle of the previous candle. Okay, and the following candle, if it's to be a sell candle, it's still going to open at the middle of the previous candle. And that is how Akinashi works. Now, most times, Akinashi only have wick on top or below, most times. Only on few occasions, you are going to see Akinashi having wick on both ends. But I'm going to explain to you the difference between all of these candles. Now, you need to note that Akinashi has its own price action. Just as we have the regular Japanese candlestick price action, Akinashi also have its own price action, which I call the unpopular price action and the best price action to work with, even as a beginner, as a newbie, or someone who is not experienced in the market. And this price action will not fail you. And it is very easy to understand, very easy to spot the candles. Okay, so let's move on. So what I just explained right now, you can see that in action here on Akinashi chart. The open price, the close price, and the following one opens at the middle of the previous candle. Always at the middle, check it out. Always at the middle of the previous candle. So that is how the Akinashi work. Now, how do we not trade with Akinashi? How do we use Akinashi for analysis in order for us to be profitable most of the times? Mere looking at Akinashi alone, you already understand the benefits, the importance of using the Akinashi charts. If you switch this to the Japanese candle, you will see the difference. You will see the difference. You will see that Akinashi is going to smooth out the trade for you, helping you to understand the direction of the market and helping you to stay on a trade, stay on a trend. But then I'm going to explain to you in two ways how you can work with Akinashi. The first way will serve as a foundation, but it is not the way for us to go. Understand? The first thing I'm about to share with you, the first way to trade with Akinashi is only as a foundation, not the way to go. I'm going to share the updated way for you, okay? But let me first share the foundation for you so that you get to understand what we are doing. Now, there are two ways you can trade Akinashi, or two ways people trade Akinashi. One of them is they trade green candle for buy and red candle for sell. Okay, which is buy green, sell red. Buy green, sell red. That is how some people trade it. Now let me explain to you. Now this is the foundation, like I said. Even you would discover that following the foundation, even if you trade with it on a live account, you are still going to be profitable. But we do not trade like that. Okay? Now let me explain to you. Okay, let me just pick any part of the chart and start from there. Okay, let's start with this. Guys, I may need to confirm one more time that you can hear me before we move on.
Yes,
I
bro.
can hear you.
I can hear you.
I can hear
We
you.
can hear you. We can hear you. We can hear you.
Can hear you. I can hear you clearly.
Amazing. Let's move on. Let's move on. Remember, this is the daily time frame. This is a daily time frame. Let's forget about the pair we are trading now, but this is the daily time frame. What does it mean when we are on a daily time frame? It means it takes 24 hours for this candle to open and close. 24 hours. If we are on the 4 hours time frame, it means it takes 4 hours for one of this candle displayed on the chart to open and close. It means this candle, although it is very small when compared to this one, but it took 4 hours for this candle to open and close. So it's not about the size of the candle. It's about what time frame are you currently on. That determines how long it will take for one particular candle to open and to close. The same goes for the 1 hour. 1 hour. And if you check your screen very well, you will see that what this means is that this particular candle, which is the last candle, the current candle, it's about 13 minutes to go for this particular candle to close and the market to open another candle. In the next 30 minutes, once this candle gets to zero, this candle will close and another one will what? Will open. And when you confirm that from the time up above, look at the minutes. That is 9:46. And you know, the candle will close by 10 o'clock. If you remove 46 from 60, we have 13. 13 for, yes, we have about 14, okay? Which is 14 minutes. 13 minutes, 14 minutes for that candle to close and open another candle. Let's go back to the daily. Now on the daily, what this means on the daily is that it takes 24 hours for this candle to open and close. So this current candle now, what we need is about 12 more minutes for the candle, this particular day, today, May 1st, for this candle to close. 12 minutes to go. Remember, the market closes by 10 p.m. So we're not working with 24 hours time, where you're going to be expecting that the market should close by 12 midnight or 11:59. No, the market closed, the first market closed in a day by 10 p.m. Now, once it's closed, for some broker, you might experience that, you know, the market closes on Friday. And for Friday night, Saturday, and Sunday, the market is still, it's not moving. It's like on a standstill. But during the day, you know, we say the market open 245, which is the market does not close from Monday to Friday. Yes, it is correct. But the session, the timing, okay, there is a close, and that close happens by 10 o'clock. Now, when that close occurs, some broker might show you a standstill. Okay, there might be a pause. Okay, the market may stop moving for a while, but it will not be for long. It will not be up to an hour. Sometimes 5 minutes, 15 minutes, the market will pick up again. Sometimes some brokers might not even show you that close. It will just continue to move up and down. Okay, but what I want you to understand here is that on a daily basis, even during the weekdays that the market is open, the market also have a close and open. So it closed by 10 p.m., open by 10 p.m. Okay, it closes and open almost immediately. Now, let's pick somewhere from the charts and analyze from there. Okay, so let's work with this. Let's work with this. Now, how do we trade the buy green, sell red? This is it. Please pay attention to this part very carefully, because this part will form a foundation for you, and it will help you as you continue to work with our strategy. So this is the strategy. You come to your phone by 10 p.m. each day, every day 10 p.m., Monday to Friday. So in the next 10 minutes, it will be 10 p.m. Now, when you come to your chart, what are you looking at? Just one thing. You are asking yourself one question. For example, if this is the current candle today, and these other ones are not visible yet, they are not visible yet. This is the current candle. The question you are going to ask yourself is, how did this candle close? You know, this is 9:50, and by 9:59, this candle will close. 9:59, as at this is going to be 9:59. I think it's 60 seconds. Yes, 9:59, like this. 9:59 minutes, then 59 seconds. This candle will close, and by 10:00, okay, this other candle will open. I believe you understand what I mean. So this is today, which is the one that started in the morning, is this one. The candle that started in the morning is this one. This morning is this candle. Now, by 10 o'clock, because by 9:51, we don't have any business in the markets. We are not coming here to do any analysis by 9:59. We are coming here once it's 10 o'clock. By that time, this candle must have closed, and then this one will open. So we are going to ask ourselves one question. Because right now on the chart, we are seeing this particular candle opened. So the question we are going to ask ourselves is, how did the previous candle close? If you must write it down, write it down. How did the previous candle close? How did the previous candle close? Now, what is the answer? The previous candle closed as green or buy. So when we see green, green is buy. But when we see red, red is sell. So if I say buy, it means it closes as a green candle. So how did the previous candle close? It closes as a buy. So what we then do is take a buy trade on that day. As soon as we confirm that the previous day closes as buy, we take a buy trade. So for you to make that confirmation, it will not take you more than 30 seconds. So let's say by 10 o'clock, 1 minute after 10, you have confirmed already that the previous candle closes as buy. Although the current candle is showing us green, but we're not concerned about the current candle. Why? Because remember, it is called current candle, and that current candle is still a moving candle. A candle can open as a buy candle, but later close at the end of the day as a sell candle. We are not concerned about the one that is showing at that time. We are concerned about this one, which is the previous day candle. If the previous day candle closes as sell, we enter a buy trade. Now let's introduce horizontal line for the sake of we just knowing where we took the trade. So where we put this blue line, let me put another one there. Let me put vertical line there. So at this point is where we took the trade. Okay, we took the trade at this point where the two line intersects. Okay, and we took this trade simply because this previous day closes as a buy. This previous day closes as a buy. Now, we are now on a buy trade. When you take that trade by 10 o'clock, you know, 10 o'clock is 10 p.m. We're talking about 10 p.m. And that is like your bed time. Your bed time, you should go to bed. So when you take that trade, please lock your phone and go to bed. Lock your phone and go to bed. Don't bother checking your trade until the next morning. Even when it's the next morning, do not check your phone. Resist the urge. Now, when it's 12 noon, don't check your phone. 6 p.m., don't check your phone. 9 p.m., don't check your phone. Then 9:55, like this right now, the time right now is 9:55. You should be at alert because it is now time to check your trade. You know, the previous day you took a trade based on this one that was green. So now this one is still running. Okay, about 5 minutes to go, this one is going to close, which is the current day candle. We are going to allow it to be 10 o'clock so that this one will close. This particular candle will close and open this one. Now, once it's 10 o'clock, this one is open, you now come again to the chart and ask yourself the same question. How did the previous day candle close? How did the previous day candle close? It closes as a buy. Remember, we are already on a trade from the previous day. So if this candle closes as a buy, which is the previous day candle closes as a buy, we are already on a buy trade. So what it tells us is hold your buy trade. Do not close your trade. And you decide, oh, I'm not going to close my trade. And then you lock your phone again and go to bed. Go about your daily activities for the following day. So right now, we are now on this particular candle. This candle is moving up and down. Other forex traders are trading the rise and fall of that particular candle. Some people have blown their accounts while they were trading on that same day. You are not doing anything. By 10 p.m., you come back again to the charts when this particular candle is closing and check. So when this candle closes, this one will open. So when this candle open, the question you ask yourself is, how did the previous day candle close? Don't unmute your mic, but answer the question to yourself. How did the previous day close? Is it as a buy or as a sell? Is it as a green candle or as a red candle? Obviously, as a green candle. So stay on the trade. Stay on the trade. You're already on the trade, so stay on the trade. If you were not on a trade before, and you come and see that this day you come to the market 10 p.m. and you are seeing this candle, you ask yourself, how did the previous day close? As a buy, you enter your trade at that time. If you are already on a trade, you can stay on your trade. If you're that person that want to add position, be careful. We're going to show you each and every day that the previous day candle closes as the same trend as a buy trade. But for now, our focus is we took our trade here and we have been checking every day how did the previous day candle close, and it has been on a green candle all the while. So what we are doing is we are holding our buy position. And the following day you come again, this following day, how did this day close? As a buy, you hold your position. I'm going to explain something to you. Do you know that on this particular day, if on this day you made like your account was reading like $50 profits, on this day, your account, your $50 profit will reduce to $30 profits. And even on this day, your $30 profits will reduce to $22 profits. But what we are concerned about is should I stay on the trade or should I close my trade? That is our concern. Now, on this day, when this day finally closes, this one closes, this is the current candle. We now ask ourselves on this current candle, when this is the current candle, we ask ourselves, how did the previous candle close? As a buy candle, although you are seeing that your profit that was 50 is now $22, you stay on the trade because the previous day closes as a buy. And then when you come check the market again, the following day, which is on this particular candle, you ask yourself, how did the previous day close? As a green, stay on the trade. By then, you discover that your $22 profit has shoot up to $45 profits. The following day, remember, this is where you need to understand it clearly now. The following day, you are seeing red, right? But what's the question you do ask yourself? You know, this day has closes and this candle was just formed on that 10 o'clock. So what do you ask yourself? How did the previous day candle close? It closes as a green, okay? On this day, you ask, how did the previous candle close? As a green, you hold on to your trade. You hold on to your trade. And then on this day, you then ask yourself, on this day, how did the previous candle close? If you were to answer, I know your answer would be red. On this day, how did the previous candle close? Red. Once the previous candle closes as red, close your buy position. So it means we're exiting the trade here. Remember, guys, I told you that this is just the foundation, what will form your foundation, but this is not what we trade with. This is like we are just digging the foundation for you. So from here now, it means you have banked this profit to this point. From this point to this point. That's profit you have banked. And it took you about 1, 2, 3, 4, 5, 6 days to bank in that profit. Now, what do you think would have happened to other forex traders? They would have traded on these days and blow accounts. I mean, only struggling traders, not all traders. So there are some who would have traded and make so much money. Yes, of course. But I mean, struggling traders like us who are not learning the simple trading methodology. They would have traded day 1, day 2, day 3, lose money, make money, and lost the money again. But you, and remember one thing, as they are trading, their psychology is affected, their emotions are affected, too many things is happening to them. They don't have time anymore to do any of that thing. They are focused on the charts. The ones that are scalpers have been just on the chart, looking at the charts, trying to scalp the market. The ones that are day traders, in fact, but you who are trading with this methodology, you took your trade here and you did not look at your chart. I know, although you may look at your chart because you will always be tempted, but based on what we are saying, you did not look at your chart during the day. You only come to the chart once per day by 10 p.m. And once you come here, looking at the charts, how long does it take to answer that question? How did the previous candle close? How long does it take? Not up to 30 seconds. How long does it take to load your trading view? How long does it take to switch to the pair you are trading, to change the time frame, and then look at how did the previous candle close? Altogether would not be more than a minute. And it means that you are only doing just 1 minute of analysis to decide whether to enter a trade or to stay on your trade or to do nothing. 1 minute of analysis per day have put you on profit. Why the man that trades 1 hour per day is still struggling to make profits? Yeah, you are not doing much of analysis. But before we move further to anything, I must let you understand the risk management of this strategy, of this approach. The risk management here is this. Trading with $100, you have to enter your trade with 0.01, one position. Meaning, do not open 0.01, position 1, open another one, 0.01, position 2. Don't do that on a $100 account. Even when your account is 150, maintain 0.01. When your account is 190, maintain 0.01. You only increase to 0.02 or open to position when your account is $200. I know you may be asking me why. Are we not like cheating ourselves? No. The reason is because of the time frame you are trading. If you have understood time frame very well, you will understand that the day we took that first trade, which is on this day, price did not just keep going up, 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 up. Price also went down. If you look at it from the lower time frame, price went down, went up, went down, went up. So what we are trying to avoid is a situation whereby, during the first day, you are not looking at your chart after you've taken the trade. You're not looking at what's happening on the day. And during that day, some people must upload their account. So what will give you that confidence not to open your chart during a whole day and you are on a trade is simply one thing: your risk management. Your risk is very low. So when you have a low risk 0.01 and you are trading with what I just shared with you, because both trade with 0.01 and still blow up a $100 account. But when trading with 0.01 on a $100 account and trading with this Aginashi I just shared with you, believe me, you are on the positive side of things. And guess what? News cannot come and just affect the market and push you out of the market. or put you on a loss. You must understand that news will respect what is happening here. News, regardless, even if the market, the news is negative for that day, yes, it's going to go down on that same day. Okay, market's going to go down. But guess what will happen? Boom. Market's going to go back. Because the technical is telling you that the market is a buy market. So, like I said, what is helping us to enter a trade and do not look at the chart for a whole day is because of our risk management. You only trade with 0.05 when you are having $500. So you understand what I'm trying to say. $100, 0.01, $300, 0.03. That is how you trade with the risk management. So as your account size increase, you should know how to increase your lot size. Now, remember this day, because when we close that trade, we have to like every trader wants to be on a trade. Okay. This is not the other day when this day now closes. Okay, this red will not close on its own. When the red closes, it's going to form green. Remember, we don't make a decision based on the open of the daily candle. When that candle is currently moving up and down, we don't make a decision. We'll make a decision based on the previous candle. So when this candle open, we are going to ask ourselves a question. How did the previous candle close? It closes as a sell, and then we enter a sell trade. That is it. We sell red, buy green. Then we work based on the close of the candle. So we are going to enter a sell trade here. We are going to enter a sell trade here. Now, when we enter a sell trade there, we are going to hold on to that sell position until this candle will close. When this candle closes and open this candle, on this day, we are going to ask ourselves the question, how did the previous candle close? The previous candle closed as a buy, and we are already on the sell trade from this candle. So what does that mean? If the previous candle, if while at this point, the previous candle closes as a buy, that is a signal for entry of a buy trade. And we were already on a sell trade. So what it means is close your sell trade on loss. Obviously, you took your sell here, market is already here. So you're going to be closing your trade on loss and enter a buy trade. So you enter a buy trade from here, you close on loss and enter a buy. So let's pick the points. We're entering a buy trade from here. Okay. So we enter a buy trade from there, and then if you follow through what we just discussed, it means you are going to close that buy trade at this point. So you discover that at this move, you made just little profits, very little or no profits. And that is how you begin to follow it. Now you agree with me that following it at this point, you are going to like lose money here, okay? You are going to lose money if you really do the calculation very well. Because of time, you may not be able to calculate it. But if you calculate very well, you discover that we are going to lose money there. Okay, we are going to lose money there. Come in a minute. Okay. From here down to this point, we are going to lose money. Okay, but if you check that pips of trade and then you follow it again, we are going to make money from here down here. So that is the foundation, but that is not how we trade. Now let me introduce you to how we now trade the strategy. Okay, These two is also even the second way. Then we're going to show you how to trade finally. Now, if you follow what I just shared with you, you will discover the amazing profits you are going to make from here down to this point. You discover the amazing profits you are going to make from this point down to this point, and from this point down to this point. Such an amazing profit. Why? You discover that the Akenachi kept displaying green. So we were holding our position until we saw the red and we exit. So we hold the position from here, green until we saw this red and we exit. So we would have entered and closed here. So following what I just shared with you, you are going to be profitable. But we don't trade like that. Okay, we still don't trade like that. Now, how do we not trade it? Let me show you something. I'm going to teach you price action on Akenashi, but not now. Okay, let me just show you something. Price action. I'll teach you that later, but let me show you something. We are going to apply an indicator called the moving average indicator. To apply indicator, you come over to the top of the chart and then you click on indicator. When you click on indicator, you click on, just search moving average. Now you're going to see this one, moving average exponential. Click on it. You can make it a favorite so that you can always see it there. Okay, so you click on it. When you click on it, it's going to go on the chart. This is it. That's appear here. Then we need to adjust the settings. This is the settings. Tap on the indicator. So tap on it here. Then click on this one, the settings button, and then let's adjust it to 8 EMA. So we change that length to 8. We change the length under here, which is this length, to 8. Okay, so let's change that to 8, and we change this SMA to EMA, and then we go to style. Okay, and change the style. Let's use a black column. And let's change the opacity, the thickness to something thicker. Aha. Now let me tell you the reason why we are using the ATMA. So you don't just have it in your chart and don't know why we are using it. When I first got this strategy to trade with, I discovered that I was entering and exiting trade when I was not supposed to exit the trade. For example, I discovered that when I enter a trade here, I hold my trade. When I see this red, when the candle closes as red, the following day, I'm going to close this trade. And the next trade will not be on a buy trade, which will make us so much profit. And then I ask myself, why would I close here? Yes, this is what Akenashi is trying to prevent. It's trying to prevent us from making a decision to close our trade when the market is still trendy, simply because of a pullback. So we don't want to be moved. We don't want to be shaken by a little bit of pullback. That is why we are using Akenashi. So if our strategy tells us the market is going to buy, regardless of your strategy you are trading with, some of us have different strategy we have bought from different people, different coaches. Some of us have also formulated our own trading strategy. Now, work with your own strategy even. Let your strategy tells you to buy, and then you enter the buy trade. Now, to exit that trade, you can even come and work with Akenashi while you are on that trade. Let Akenashi tells you whether to still remain on the trade or to leave the trade based on the buy green red. But then I said to myself, why would I have closed here? Why should I have even closed my trade here? Why don't I hold the trade up to this point and bank so much profits. That was what I was looking for. Why? But also note that for Akinashi to have shown us a red candle here, there was a big move downward, a big pullback. That is why we saw that red candle. But yet, if I have entered the trade at this point, this is my best entry. I would have preferred that I hold this trade down to this point, because if I close here, to get a good entry again is also difficult sometimes. And then I've also short the profit from these points. My profit is shorting. So that is when, working out on Akinashi and what we have, we came up with the ATMA and say that if we are on a buy trade, for example, you see now that the price is ranging above the ATMA. The ATMA is the black line. Now, even when the market closes, how did the previous day close? Previous day close as sell. Even when the previous day close as sell, we should not exit that trade, because that sell candle is still above the ATMA. We want to see a situation where the sell candle will close below the 8 EMA as a confirmation that trend has changed. So that was why we introduced the ATMA. Now, with the ATMA, we no longer need to enter a trade based on buy green, sell red. Why? If we were to enter a trade on buy green, sell red, what it means is that this doji that you are seeing in front of you, this particular doji is a green candle, and we probably might have entered a trade on that candle. But yet, that is not a confirmation. The market has not given us a confirmed entry yet. They would have entered there. So we don't want all those situations where we enter trade. For example, this one that happened here. This one that happened here. Aha. This loss that's going to occur somewhere around here. We want to avoid things like this. Okay? So what do? We now work with the ATMA. Now, even on ATMA, how do we take trade? This is it. We need because I have not taught you the price action. There's something I'm not going to say here right now. We need a green candle to cut above the ATMA. Okay? A green candle. You see, price was reaching below the ATMA, but this one cut above the ATMA. So we would have entered the trade at this point. And then, you see, once we enter the trade now, at this point, when price cut above the ATMA, yes, so this is a green candle. The previous day closes as green, but we're not going to enter because it is below the ATMA. Now, the following day, how did the previous day close? The previous day closed as green candle is above the ATMA. But what we want sometimes is we want most of the body of the candle to be above the ATMA. See this one? If I'm to ask you, how many percent of the body of the candle is above the ATMA? It is about 30-40%. Let's say 40% of the candle is above the ATMA. We want a situation whereby 50% or more than 50% is above the ATMA, and that would be on this candle. So you see, from here above was what cuts across the ATMA. More than 50% of the body of the candle. The body of the candle is this green part of the candle. This green part of the candle. We're not talking about a wick. So when we see more than 50% of the body of the candle above the ATMA, it is our signal to enter the trade. So we would have entered the trade here. So let's remove all of these ones. So we enter the trade at this level. Now we keep asking ourselves, how did the previous day close? Green. How did the previous day close? Red. Now, once the previous day closes as red, should we close our trade now? No, because we are going to ask ourselves another question again. Did this close above the ATME or below the ATME? If it's above the ATME, like it happens here, and we are on a buy trade, do not close that position that you took here. Hold on to your trade. The following day, how did the previous candle close? Green. Now we are now going back to profit, so much profit again. We are still on the trend. We are still riding on the trend. And then we keep moving, okay? We keep moving. Now, price action, Akinaki price action would have tells us to exit the trade at this point. But I do not want to tell you about it now. I don't want to get you confused. So we are still going to hold the trade because price is moving above the ATMA. So we hold on to that trade. When do we now close? When most of the body of the candle closes below the 8 EMA, which we see happens here. Most of the body of the candle closes below the 8 EMA, and that is where we are going to exit the trade at this point. Now let's look at what we bank in profits. You see how you head on to this trade from this point down to this point, just by working with the 8 EMA. We have the previous candle close, but also combining it with the ATMA so that you get to ignore some false signals to leave the market like this one. Now let me show you that when you enter, this is not a magic wand, or this is not holy gray, because some people look for holy gray. This is not holy gray. Now, this met our condition to enter a sell trade. Why? Because it is a red candle that's cut below the ATMA, and most of the body of the candle is below the ATMA. So therefore, we are to enter a sell trade. But when we enter a sell trade here, the following day, the market closes as red. This day, the market closes as red. But on this day, the market closes as buy above the ATMA, green above the ATMA, which is a signal to enter a buy trade. So therefore, as we are entering the buy trade, or before we enter the buy trade, we are going to exit this sell trade. And of course, we are exiting on loss. But you can't compare this loss to the profit you made previously in the past. So when you hold on to that loss, you take the loss, and then you are going to activate a buy trade because this is a buy signal. A green Akinashi candle cutting above the ATMA, most of the body of the candle above the ATMA, you enter a buy trade. Now, when you're on the buy trade, still remember that we are on a daily time frame, please. We are still on the daily time frame. You only come to the market once per day, 10 p.m., and ask yourself, how did the previous day close? So if you ask yourself on this day, the previous day closes as green, you're still on the trade. Now, on this particular day, how did the previous day close? As red. Red, above the ATMA or below the ATMA? Above, stay on the trade. How did the previous day close? As red, stay on the trade. Let me mark where we enter our trade so that we'll see. This is where we enter the trade. At this junction. Okay. How did the previous day close? Red, green. Okay, stay on the trade. Close as green, stay on the trade. Close as green, stay on the trade. Close as green, stay on the trade. Now, note that sometimes when you enter the trade, for example, this day, this is a very perfect day. On this day, when you enter the trade, the following day, when this candle open, how did the previous candle close? Green. Stay on the trade. Now, do you know what you're going to experience? You're going to be experiencing loss. You're going to be losing that trade. Why? How do I know we're going to be losing that trade? Watch this. Look at where price got to. Probably you enter the trade somewhere around here. But right now, price has dropped a little. Then you are holding your trade. The following day, market dropped down to this level. So you see, this is not what you are going to be coming here to trade with big lot size when you are on a daily time frame, especially. Because that big lot size you are using, this little bit of pullback, we are still holding on to the trade. But this little bit of pullback that I'll call might wipe your account. You are doing what is correct. You are following the correct strategy, but you are losing money. And the difference is the risk management. So this is why you have to stick to the risk management principles. You have to adhere to that principle. Now, the following day, what happens? The market will spike up and put you on much profits. But remember, when the market was pulling down, we did not close our trade. We held on to the trade, though we may be having minus $7 loss, minus $8 loss. Maybe, for example, on the $100 account. Although it might not even get up to that point, maybe you are getting, let's say, minus because if we haven't setting stop loss, I'm not talking about stop loss here. If we are setting stop loss, our stop loss is 100 pips, and our take profit is 1,000 pips. Okay, but let's not go that way. So what I was trying to tell you is that you're going to be losing some money at this point in time, but you are still holding on to your position. Remember, you're always checking this once per day. So what that does for you is that it's going to help you to detach yourself from the trade. You are not going to be too emotionally attached to your trade. Okay, especially if you maintain the risk management, the right lot size. The following day will put you on so much profits than you were even on profit on the first day. And then how did the previous day close? Buy, stay on the trade, stay on the trade, stay on the trade. Okay, stay on the trade. You see now, red has appeared. How did the previous day close? Red above the ATMA or below? Above, stay on the trade. Red, stay on the trade. So you see, we would have not closed on this point. We are still going to be holding the trade. And then the market begin to ride more, put us on much profits. Now, how did the following day, how did this day close? On this day, how did this day close? Red. Though most of the body was not below, but when we check this particular trade, this particular candle, we see that most of the body of the candle is below the ATMA, and then we close our trade at that point. Let's put a mark with the market where we close that trade. Now, let me show you something. The reason why it is very key and important to wait for the day to close before you make, or maybe I've not said it. Let me say it now. It is very key to wait till the end of the close of the candle before you make a trading decision. Never make a trading decision during the day if you are trading the daily time frame. Now, what this means, remember I told you whatever I'm telling you here also applies to other time frames. So if you are trading the 4 hours time frame, the daily time frame, this also applies. It means never make a trading decision during the hour if you are trading on a 1 hour time frame. If you are trading a 1 hour time frame, or you took you took your trade position based on what you saw on the 1 hour time frame, and then the time it's about 1:15, 1:30, don't make a trading decision because this might happen to you. This is it. You see this spike down, price drop from this point down to this point on that day. If you were to be that person that is looking at your charts during the day when you have been told not to look the charts during the day when trading the daily time frame, you will not say, hey, I'm losing so much money. All the money I've gathered for the past how many days is going down. No. The market is going down. The market is going down. Please close this trade. Close on loss. Close on just $2 profits. Close on just $10 profits. That is what some of you do. But what I'm telling you, never make a decision. see, even if you are losing so much money, don't make, see, you must be bold enough, be courageous enough not to forget about that loss and wait till the close of that candle. The close of that candle can make a difference. Now, when the candle close, when it finally close, imagine what happened. The price is going to pull up back. This is how you know. This is how you see it. Because by me looking at it, I already know what happened. Price fell down to this point. Before the candle even closed, price came up. So at this point, if you are closing your trade here, this loss will not affect you. Okay? Or that pull down or pull back will not affect you. So this is where you are going to be exiting your trade. Okay? Now let's look how much profit we bank. Guys, look at this. Imagine you entering a trade at this point and closing at this point. Is this not amazing? Though it took you days to order, imagine 0.01, 0.01. On a $100 account, I'm not telling you if you are trading $1,000, you are not going to be trading 0.01. You can be trading 0.1 on a $1,000 account. Imagine the pips you would make from this point down to this point. Imagine 147 down to 151 or 150, 150, 150, yes, 150. This is amazing. This is amazing. Just by adding the 8 EMA. So you saw the difference. So the same thing happens here. You can then, as you close your buy here, because most of the body of the candle closes below the 8 EMA, you enter a sell. Okay? Enter a sell position. And that sell position, you're going to close that sell position when this occurs. Okay? When this occurs. So what that means is that you enter a trade here and close here. Guys, this is still on profits. This is still on profits. But if you want to even close here yourself, we have what it takes to help you close here. But right now, I'm working based on your entry is 8 EMA and your exit is 8 EMA. As the class develops, you are only going to use 8 EMA for entry and you will not use 8 EMA for exits. There are other things you will use for exits as the class develops. That means you will enter here and close somewhere around here. Either you close here, you will have the option to close here or option to close here. So you see, you are keeping most of the profits. But guys, even if you close based on 8 EMA to 8 EMA, look at the profit you bank. And remember, as you come in here, as you close this profit here, you are entering a buy trade here on that day. Guys, watch this. Guys, can you see this? It means your buy trade at this point, you will not close your trade. You will hold on to the trade, guys. Imagine holding trade for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, for over a month. Over a month. Imagine the profit you would have made on your account side. Imagine. Just by trading with the 8 EMA. Because price did not fall below the 8 EMA, you have no reason to close that trade. You keep holding on to that trade. So you'd have bank trade from here. This is our close. We have not, right now, we have not even closed. Until this day we close. Okay, this day, when this day close as sell, because this day is the current candle. It is currently moving. It has not closed yet. For that candle to close. So if you want to trade, unless maybe as time goes on, we'll show you how to close here or how to close at this point. But if you are even closing, if you are entering with ATME and closing with ATME, this is the profit you are going to be banking. You're going to be banking from here down to this point. Guys, this is still beautiful. this is still amazing. You are still going to be profitable. And this is what we call consistency in profit. Imagine profit, profit, profit. We are talk about the back down. From here down, profit. We are talk about this one now. Talk about this one. From here down, profit. Guys, are you not seeing what we're talking about? Please, if you can hear me, talk to me and tell me how you feel about what we have and what you have been learning so far. Talk to me.
Yeah. Yes, very good. We can hear it. Very, very good.
I'm following you.
Interesting.
I feel
I'll
very
follow-
elated.
Okay.
It is interesting.
Very interesting.
Amazing.
Very
Amazing.
amazing.
Very,
Yeah.
very.
Yeah.
Only that the network sometimes went
Very
away.
amazing.
This secret is top. Secret revealed.
Mhm.
This is a
Prof, can we
disambiguating
get the
forex.
Okay.
wonderful?
Very, very wonderful.
Disambiguating
It's at least
forex.
you are a professor. This is impressive.
This is where
Hello,
you
Prof,
earn your
sir.
title,
Can
Prof.
we, hello, Prof. Can we see how the video recorded?
Hello, sir. Can we ask question?
Yeah, that's a question. That's a question now.
Yes.
Let's take questions. So we're going to continue again. Maybe today is Wednesday. On Friday, Saturday, we're going to continue from where we stopped today. So let's take questions. We have done about 1 hour 30 minutes.
Sir, hello.
Yes.
Hello. Okay,
Hello, sir.
Yes.
I didn't have any question, but I have a request. Hello.
Okay. What's the request? Yes.
Okay, my request that, sir, can you just share the video with us? I have the video recorded today. Can you just send it to us?
Yes.
It's possible.
Right now we are recording this session and we are going to share the video on the mentorship group.
Okay, thank you very much.
Yes.
Okay, Prof. Prof, I have a question.
Okay, what's the question?
Please, is this formula tested and proven?
Look at the chart now. Are you not seeing the chart? Is it?
No, I'm talking in terms of practical terms.
Practical terms, it is tested and proven. Just maintain your risk management that I talked to you about. Just stick to the risk management. The only way it will shake you up balance is when your risk management is not intact.
Okay.
That is the only way to shake you up.
Okay.
Okay, I have a question. My own question is this the MT4 is it a hacking that hacking type of candle, is it not there? Can't we make use of the Hekinachi, or it must be from trading view?
Okay,
Number one.
This is it. Please follow up. Listen. Now, when you come to the chart and discover that this is a buy signal for you, it is time for you to buy. You leave your trading view and go over to your MT4, your MT5, and take your trade. It's as simple as that. Place your trade. Execute your trade. You don't need to do analysis on MT4 or MT5. You just do analysis on trading view. Switch. When you see a buy signal, you switch to your MT4, your MT5, and place your trade. Do you understand now?
I understand it, but what I'm saying is that hacking stuff is in trading, is in MT4 too. If you use it direct, it will not work.
Now, Akinashi is not on MT4 mobile. It is not on MT5 mobile, but you can find it on MT4, MT5. If you are using the laptop, you'll see it there.
Okay. Another question is that this formula, does it work in all like Bitcoin, indices, index, apart from, is it only for currency pair?
It works for index, synthetic indices. You can use it. The only thing you need to do is just ensure your risk management is intact. You use it for anything, Bitcoin, gold, whatever you want to trade.
It's okay, sir.
Okay,
It's what?
Prof.
If you want to
Okay.
ask question, unmute your mic. You can unmute your mic by yourself.
Okay. For the purpose of us who are new, we
Okay.
have this problem of you pick a trade, you pick at a particular point, then as at when you want to enter, the price has moved. What do you do in that case? Hello?
What time frame did you get the signal from?
Okay, as you are saying, you say we should use a daily time frame.
Okay.
Can
I
use-
get your question. Let me answer your question. First of all, let me correct something. What I just explained to you now, I explained to you on the daily time frame. It works anywhere. You can do
Okay.
it on the 1 hour time. On the 1 hour time frame, it means that every 1 hour you go check your charts. How did the previous hour close? How did the previous hour close? Simple. Now, when you get a signal in Forex and you enter the trade, the price must move, the price must change. You cannot enter the trade at exact that price. It doesn't matter. Go and enter your trade.
Okay.
Unless it only matters when maybe you are trading on 1 minute time frame. And it does not matter. It does not matter. You don't have any issue.
Okay.
Price must always move every split second.
Thank you very much.
One more question,
Yeah.
sir.
So it doesn't
Okay.
involve, stop trade and take profit in this case. It doesn't involve that.
Right now, I've not introduced stop loss and take profit to you, but you see how it works.
Okay.
We are going to introduce stop loss and take profit. Let me just show you. If you want to even do take profit, this is your stop loss and take profit. Let me show you. Now, our stop loss here is 100 pips. We don't use. Remember, our lot size is very low. Our big point is very low. So your stop loss is 100, and your take profit is 1,000 pips. Okay. Now, if you don't want to use that one, this is what you use. As soon as you get your sell signal here, this is the last swing high. Put your stop loss above the last swing high. Stop loss. But don't put your take profit. Follow the trade. Or you can put your take profit 1,000 pip. Or you can put your take profit at a major support or a major resistance. That you know that if you enter that trade, the major thing is once you hit your take profit, don't enter that trade again. Wait for the next opposing signal or for market to give you buy and give you sell again. So you can put your stop loss here, which is the last swing guy. This is SL. This is your entry.
Stop loss.
Okay, and this is your take profit. Your take profit is there. CP.
Okay.
That's a take profit.
Okay.
So you can trade if your risk management, like I've explained to you, is intact. You can trade without stop loss. Like I hardly trade with stop loss, even if I don't even check my phone. I don't care. I know nothing will happen to my accounts. But for you to be on the safer side, you want to put stop loss, let this be your stop loss, the last swing high. Okay, any other question?
Yes, I have a question.
Okay.
You suggested stop loss to be 100 pips and the take.
No.
Does that also apply to if you are trading the 1 hour or the 4 hour time frame?
No, this applies only on daily time frame.
Okay.
Yes. If you are trading 1 hour time frame, please use the last swing high or the last swing low at your stop loss.
Okay.
You understand?
Yeah.
Then why you use major support and resistance as your take profit, or I'm going to introduce you to some other use for take profit, or you just use your what? Your ATMA when price cross above the ATMA USD to trade.
Okay, or we can use those lines given by the
same now. That's 100,000
software, the JMPH.
Yes, the reason why I'm not talking about those lines, the reason why I'm not talking about those lines right now is because right now, like what I've not exposed you to the software right now. We don't know anything about software right now.
Okay.
So what we know about now is a simple trade methodology for now. For somebody who have not heard about the software, what you know is just the charts, the price action, the Akinachi. That's all you know about.
Where I get the money?
Okay.
And
I don't send and give your sister.
But it's not regarding what you taught today. It's because I've gone through the process.
If you want to ask your question, if you want to ask the person that is talking now, please unmute your mic and talk again. Unmute and ask your question now again.
Can I ask?
Yes, go ahead now.
I have gone through the course on all the courses, all the videos. And I've been practicing for the past 3 days. So I want to ask using the simple trading methodology to do your scalping.
Okay, please. I will recommend that you don't ask that question here. Just be with us so that those who are here for the first time, we absorb this particular thing we just taught today, and your question will not be like a confusion to you. We are going to get there before the next 2 weeks. We're going to get to where you are talking to right now, and then you can ask that question on that class.
Okay, all right.
Yes.
You already said that.
So any question should come from what I just taught today. If you have a question from what I taught today, ask.
Okay, but what you taught today, it can be applied perfectly in the lower time frame, like the 4 hour and 1 hour, right?
Very, very well. Fantastic. The only thing I will tell you, do not apply it on anything below 15 minutes.
Okay.
Not that it does not work there. But because that is the lower time frame, and they just lower time frame have the way they operate, that the way they behave. But I tell you, you can trade it with even 15 minutes, even 5 minutes, and even one minute. Exactly the same thing. But you have to trade along with the trend, and those lower time frame, you may think that the market is a downtrend. But meanwhile, generally the markets are an uptrend, and that's why I don't trade it there.
Okay, sir.
Yes. So any other question for today's session? We are almost doing 2 hours.
Last question regarding what you taught today.
Okay.
Just want to confirm, this method can USD Japanese yen, right?
It's for all currency pairs.
All currency pairs, okay.
Although I like to tell people that it works best on some selected pairs.
Okay, please tell us
over the months and years, other of our students has come to say, Coach, Prof, this thing works on all pairs. Don't limit it to USD JPY or other pair that it works best on them. It works on every pair. So that's what I'm telling you. It works on every pair.
Okay.
So I want to ask a question, not really for what you taught today regarding the software. I have not received any.
No, we will not take question here today.
I know I have not.
Any question belonging?
It has not been installed them. And the seller code.
Have you sent me your email and password to your trading view?
Yes, I have done that since today.
Please, send me a message on WhatsApp, not today, please. Tomorrow morning, please.
And again, the seller course, we have not been given access also.
If I've not given you access, I've given access to a lot of people. If I've not given you access, send me a message.
Hello, sir. Hello, Prof. Yeah,
Yes,
well done, sir.
Yes, sir.
Please,
Thank
I
you very
want
much.
to remind you about this replay of this video, please. We need it, sir, because network does not make us to listen to
Yes,
some part
it's
of
available
the.
by tomorrow. It's available by tomorrow.
Okay, sir. Thank you, sir. Thank you.
Yes. We are still going to download this video, so let's not make it too long. Because we're still going to use data to download it.
Okay, thank you very much, sir.
Okay, so let's have our next session again on Saturday. Thank you very much. I appreciate all of you who joined the session today. It's a great day. Nice to be with you all, and I wish you all success in the financial market journey. Just ensure you go through the training over and over again. You are going to understand it. It is very simple. The only thing you need is to build confidence in what we have. Okay. So once again, thank you very much. I appreciate you all. I sign out.
Thank you.
you. Thank you.
Thank you,
Good night.
Prof. God bless
Thank
you,
you,
sir.
Prof.
Thank you.
Thank you for sharing your knowledge.
Well done, sir.
Thank you, thank you, thank you, thank you. Thank you, Prof.
Thank you, Prof.
I appreciate the time and the training. Simple trading professor, I appreciate. Excellent job. I appreciate a lot. Okay, good night.
Good night, sir.